Good day everyone. In today's video, we will discuss the circular flow of economic activities. This topic is very important, especially when you're taking up macroeconomic subject. First, we need to know the basic economic units. These are the household, which is the primary consuming units, and the business firm, which is the primary producing unit. These two basic units needs each other. As shown in the diagram, the household need to purchase goods and services from the business firm. On the other hand, the business firm needs to acquire economic resources from household. If you look at the picture, you can see that there is an outflow and inflow. Outflow means a movement of large amount of money or large number of people from one place to another. While inflow means that an amount of something such as money or goods that come into place. If you look at the arrows, you can see the dark color, which is the movement of money, and the light color, which is the movement of goods and services as well as economic resources. The picture shows that household and business firm is dependent with each other, or shall we say that the income of business firm is the expense of the household. On the other hand, the income of household is the expenses of the business firm. So what will happen if the household will save? Precisely, the income of the business firm may reduce, since the money intended to buy goods and services from the business firm will be diverted to the savings of the household. However, if the household will save the money through the bank, then the bank will allow the business firm to borrow money for investment, then the circular flow is just okay. Please take note that bank is also a business firm. We just separate it for discussion of special purposes. Another thing, if the household will pay taxes, then money intended to buy goods and services will be reduced. However, if the government will use all the paid taxes to the right project, then the money will be reverted back to the basic economic unit, since this government will purchase cement, steel bars, and other supplies from the business firm. Hence, the money will go back to the basic unit. Lastly, if the household will decide to purchase imported goods, then the sales of the local goods and services will be reduced, and our money will go out to other country. As a summary, the outflow such as savings, tax, and import could reduce economic activity. However, inflow such as investment, expenditure, and export could increase economic activities of the basic economic units. Take note, when we look at the figure, we can see that this outflow and inflow are in respect to the basic economic units. However, if we try to consider the government as the storage tank of the inflow and outflow, so we can say that its inflow is the taxes and its outflow is the expenditure. It is important to determine the right amount of inflow and outflow. It should be balanced. If in case inflow is greater than outflow, then time will come that there will be a spillover. So there is a wastage of resources. But if there is a greater outflow compared to inflow, then we can expect a shortage of resources. Knowing that inflow and outflow must be balanced or equal, so with this diagram, we can determine how to get the amount of gross domestic product in our country. First, from the household, we can determine the consumption. Then from the business firm, as well as bank, we can determine the investment. Then from the government, we can determine government spending. And from the foreign countries, we can determine the net export or export minus import. In all consideration, this consumption, investment, government spending, and export minus import are the formula in getting the gross domestic product, which is known as the final expenditure approach formula.